People are very interested in Tesla's stocks, especially since Cathie Wood and ARK Invest made a lot of money when they bought them early. Cathie Wood, the CEO of ARK Invest, is known for buying showy stocks, and she has been optimistic about Tesla since the beginning and for 2022. She said she would put all of her money into Tesla stock. ARK Invest, Wood's company, owned more than 250,000 shares of Tesla, but she has been selling some of it. She still has a lot of faith in Tesla, and she thinks the company's stock will go up to $3,000 by 2025 after it sells 20 million cars in the next 5 years. Today, we'll look at why she's putting twice as much money into Tesla stocks. How does Wood's statement affect the history of car companies? We should find out. Cathie Wood is the founder, CEO, and chief investment officer of ARK Investment Management. Since ARK Investment Management did so well in 2020, she has become known as a strong name in the ETF industry. Cathie Wood has been making big bets on Tesla for a long time. She was recently in an interview where she talked about the sell-off in tech stocks and creativity stocks. As she generally does, she also talked about fiscal and monetary policy, the economy, market signals, economic indicators, and innovation. Before we talk about Cathie Wood's predictions about what to expect in the future, let's talk about Tesla stock for a bit. Cathie Wood wants to invest her own money in Tesla, and we'll find out why later. At the moment, a share of Tesla is worth $1,029.96. The first week of 2022 was rough, and company prices dropped by 10.57%. Some of the most exciting news for Tesla stock is that the Tesla Austin Gigafactory may open soon and that production of the Model Y is likely to start in the next 7 to 10 days. They made some test cars and have been driving them around to see if they meet their standards before they start making a lot of them and sending them to people. This Tesla model that will be released in Austin will have 4680 batteries. These batteries are very important for Tesla cars because they have a longer range, can be charged faster, and cost less to make. This is important so that Tesla can start using these 4680 batteries while building the Model Y and Tesla Giga Austin. Elon Musk wrote that Tesla will raise the price from $10,000 to $12,000 for customers who want their cars to fully drive themselves. People have bought the full self-driving ability for Tesla for less than $10,000, and each time the software is updated, Tesla gets better. So, as they get closer and closer to being able to drive themselves completely, they will raise their prices. In a recent conversation, Elon Musk talked about how full Level 4 self-driving might be possible by 2022. We expect Tesla to raise its prices when this happens. But let's go back to Cathie Wood and what she said about why she went all in and, in effect, spent most of her net worth on her strategy. We all know that most of her plans are aimed at doing things that are new and different. Over the course of several months, these stocks have taken a beating. They've lost between 50 and 75%. She emphasized that the prices of the companies in which she has invested are very good. Right now, buyers should buy them because they are in a high-value area. They might go up soon, and she thinks she will make up to 40% in 2022, which is a huge increase from last year. So, the stock market as a whole and the federal government are still not sure what will happen. You know, it's possible that rates will go up soon, maybe even sooner than thought. So that will be one of the most important things to keep an eye on in the stock market as a whole. ARK Invest and Tesla. We like ARK because they think Tesla will do well. They were the ones who went after Tesla really hard before everyone else started to do the same. ARK Invest's long-term results are one reason why she has a lot of money in her strategies. The last 5 years were great, and her creation gave her a return of more than 200%. She not only invests money from investors, but she also invests her own money in her plans and creative firms that do things differently. When you look at how ARK invests, you can see that they put money into 3D printing and virtual coins. There are also a number of ATS. Cathie Wood says in her most recent reports that she thinks GM and Ford will have trouble with their profit margins as they lose market share. ARK Invest started out 2022 by putting more money into some of her favorite growth businesses. She did this because her funds did poorly in the market last year and she wanted to get them back. In 2020, her wealth grew because she bought innovative companies like Tesla. In 2020, the ARK Innovation ETF had a remarkable gain of 153%, but in 2021, it is trading down 21%. Wood is sure that the epidemic is making people more creative, but she is not sure about the rise of classic manufacturers like Ford and General Motors. According to her investor presentation, Ford is up 18% and General Motors is up 6% so far this year, which is much better than Tesla's loss of 3%. This is the same as what happened in 2021, except that Ford went up by 137% instead of Tesla's 50%. Ford stock hit its highest level in 20 years after the company said it planned to sell 150,000 electric F-150s by 2023. When General Motors showed an electric version of the pickup truck that sold the most, the stock price went up. The Silverado electric cars only make up about 2% of their sales, and she wondered if the other 98% are on their way out as more people want electric cars. She said that the rise in buyer confidence and the end of the microchip shortage showed that the drop in sales of new cars, which hasn't been fixed yet, isn't just a supply problem. They went up because of the news about electric cars. Consider it. That's not right. Wood went on to say that only about 2% of traditional automakers' sales are made up of sales of electric cars. The rest is made up of sales of gas-powered vehicles. Wood thinks that Tesla and other electric car companies are better than traditional car companies. For example, companies like Ford or General Motors might be surprised by a loss in 2023 because it will cost them more to switch to electric cars and less people will want to buy gas-powered cars. Wood thinks that traditional original equipment makers did too little, too late, and that electric cars will continue to eat into the market share of gas-powered cars. Even though the stocks of GM and Ford have gone up over the past year, this is because investors have noticed their efforts to switch to electric cars. Because they were born during the industrial gas-powered era, the heritage players are not used to making electric vehicles. She also said that Tesla is on track to get 20% to 25% of the world's car market in the next 3 to 5 years. By 2025, Tesla could have sold as many as 20 million cars. On the other hand, last year Tesla sold just under 1 million cars. Cathie Wood defended her prediction by saying that Tesla already has 60% of the electric car market in the US and 20% of the market worldwide. In an earlier analysis by her company, Wood thought that as more electric cars came out on the market, Tesla's market share would go down. Still, ARK isn't surprised that Tesla's share of sales of electric vehicles around the world is staying the same or growing. This gives ARK the confidence to be even more optimistic about Tesla. GM, on the other hand, only sold 44,697 units during the third quarter of 2021, which was 218,195 units less than the same time last year. They say it's because of problems in the chip supply chain, even though Tesla's sales have gone up every quarter. One thing to keep in mind is that electric cars need 10 times as many chips as cars with internal combustion engines. Even though Tesla's sales go up every quarter, showing what people want, GM is selling the wrong thing. Volkswagen and Toyota are the two biggest automakers in the world right now. Both of these companies have a wide range of names and make about 10 million cars a year. If Wood is right, this means that Tesla will take over the entire market share owned by the German and Japanese giants. Wood's prediction is exciting for Tesla fans and investors, but the company's stated goal is to make 20 million cars a year by 2030. There is no doubt that Tesla is an important car business. Tesla's impact has changed the way that many traditional car companies think about electrification as a way to grow and change. One reason is to save money on gas, since costs have never been higher. Just giving a few examples of Tesla's work doesn't seem to do him credit. Instead, Tesla has gotten a huge number of people to switch to electric cars. The company's sales keep going up year after year because it keeps coming out with new models and technologies, and because more people are becoming aware of how great it is to drive an electric car. Do you think that Tesla will be able to sell 20 million cars by 2030? Add your thoughts below.